All right. Today we'll be looking at weekly charts of all of the indices, and there's a lot going on right now in the indices that could tell us we're either trying to break out of a correction back into a bull trend, or we are simply putting in the next lower high within a bear trend, and it's going to be very important over the next couple of weeks how the price action behaves, and that is going to give us a hint of which scenario we're going to get. So today we'll look at the weekly charts of all the indices and we'll go through all of the technical indicators and try to see if we can predict which scenario is the highest likelihood. Also, TrendSpider is currently offering their Black Friday sale, which is now active, and I'll put those details on the screen right now, and I'll also put them in the description below. And as long as you use the affiliate link below, you can capitalize on this sale by having huge savings, especially if you sign up for those annual plans up front. Also, don't forget there's a link below for the tutorial on how to set up your TrendSpider charts to look exactly like mine. So if you do like this layout and the indicators that I'm going to use, you can find that in the description below as well. Alright, so the first weekly chart is SPY, and the first thing I want you to pay attention to is that we are coming up to the resistance trend line that currently defines that correction downtrend of lower highs and lower lows. And during the correction, we broke through two support trend lines, which connected the March lows to the August lows, and then when we broke that support, we came down to the trend line that connected the lows from October and March, and we spent 2 weeks below that support trend line as well, which told us even though that was a correction, there was the possibility that downtrend continued and we officially enter a bear trend. So just looking at the price action, we still have no evidence that this bounce, which has been very impulsive, is breaking out of the downtrend because we're still below the resistance trend line. So what I'm trying to tell you is it's still possible we get rejected from here and then still continue lower and make another lower low after this lower high and continue a bear trend. Now the tricky part about this is if we go through all of the indices quickly, I want you to pay attention to where the price action is currently relative to the downtrending resistance. So in SPY, you can see that we're very close to hitting the downtrending resistance trend line. Next, we'll jump over to the triple Q's weekly chart, and you can see that we're starting to break above it for the first week, and we're coming very close to these previous highs that we had back in August. So on the triple Qs, we had a very vertical 2-week bounce that broke through the resistance, even though SPY, we are currently just now arriving at that resistance. The next index would be the Dow Jones, and you can see we're sitting right on top of the downtrending resistance trend line and even starting to try to break out from it. So the Dow Jones is at resistance, just like SPY. And then finally, I want to look at the Russell 2000 weekly chart. And you can see the Russell 2000 got up to that downtrending resistance trend line with a very impulsive weekly bounce. But now we are getting a very sharp reversal and rejection, not only from the resistance trend line, but we're also getting a rejection from the previous support trend line, which is now acting as resistance. So when we do the weekly technical analysis, I want you to understand that a lot of the indices are not giving us the same exact read. When we have the mega caps in the NASDAQ 100 triple Qs breaking out, and then we have the 2000 small caps in the Russell 2000 still getting a very bearish rejection. So without a doubt, market breadth is absolutely horrible, and a lot of the stocks in the New York Stock Exchange are still declining, and it's really just a narrow focus within some mega caps that are in the NASDAQ 100 that are still keeping the indices alive. So when we jump back over to SPY, I want you to understand why SPY has not yet started to break out, even though the triple Qs have. And that is because a lot of that market breadth is very narrow and very narrowly focused in the NASDAQ 100. So there is a strong case to be made that only 7 to 10 stocks are moving the indices higher, which could be very evident if you look at the Dow Jones and you look at the Russell 2000, which are not performing very well year to date, despite SPY and the triple Qs having very successful bull runs. So moving forward, the question on SPY is, are we going to get a higher low pullback into a higher high breakout and confirm a bull trend, which will tell us that this downtrend is ending and we can go back into a bull market? Or will the price action reject from this resistance, fail to make a higher low, and then continue to plunge to a lower low, confirming a bear trend? So both of these are very valid scenarios, and we're going to need to watch the price action and the technicals very closely to see which one is more likely. And the price action breakdown, to tell you to be a lot more cautious, will be a breakdown below SPY 430. Right here around the downtrending resistance trend line is SPY 440. And the critical support will be 430. And if we get rejected from 440 and break down below 430, it is very possible we start trending back down towards 410 for either a double bottom successful retest, or we break down and confirm a bear trend and start trending down towards 400 and possibly even lower into the 380s. So obviously that would be more of a bear market scenario, but we can't rule it out completely until we get a higher low, higher high breakout. So what I'm trying to tell you is patience is going to go a long ways here, because at some point to validate a bull trend, we will need a higher low, higher high breakout. And when we see that price action, we can get a lot more confident that we're back into a bull trend and not just some kind of bear market counter trend relief rally before we make that next leg lower. So be patient and just play the risk reward ratios. And right now the risk reward ratios are going to be favoring the bears and the sellers as we approach resistance. And then at some point that should lead to a pullback sizable enough to give us either a higher low or a confirmation this was a lower high as we break down. And then trading will be a lot easier for you trend traders who are trying to identify if we're in a bull trend or still entering into a bear trend. So the two critical levels I want you to pay attention to will be right here at 440 and this support down here at 430. And if we break 430, another great support level is going to be down there at 420 and 410. So pretty much every $10 in SPY is very critical right now, because I just got done telling you 440, 430, 420, and 410. That's just a dumb luck coincidence that those happen to be the critical levels right now, but it does make it a lot easier to remember and a lot simpler to follow the price action. So then next, let's put on the technical indicators. And again, there is a tutorial in the description below on how to set up your charts to look just like this. And the number one thing I want you to look in the technicals is that 2 weeks ago, we were closing outside the weekly Bollinger Band, which is an extremely oversold condition. And usually when we get an oversold condition, we will need to correct it. So it is possible the last 2 weeks are simply just a correction to that oversold condition. And it's still possible this strong bounce could be a lower high within a bear trend. Now looking at the technical indicators, we can see the weekly RSI was getting a little oversold down there in the 30s, and it has since bounced back above 50. And technically any RSI above 50 is starting to get back into bullish territory. So if the RSI continues to climb and holds above 50, it is possible this was just a correction within a bull market and we're going back into a bull trend. If that's the case, we need to see SPY continuing to close above the weekly 20 simple moving average and that resistance at 440, and eventually confirming a higher low into a higher high to confirm we are in a bull trend. So if we're going bullish, we need to see that weekly RSI holding above 50, and you can see the MACD is still above 0, and it could be starting to pivot and try to cross back over to bullish territory. But if at any point the MACD continues to roll over and breaks down below 0, it's going to start signaling we're likely heading back into a bear market. And then down here we have the squeeze indicator, and we can see we're still squeezing, which is no surprise, because if you just look at price action, we are sitting at the same prices we've had back in June of this summer, so we really haven't gone anywhere now for 5 to 6 months. So at some point, all of this energy of moving sideways and all of this consolidation is going to lead to a very large next leg move in this market, and our job as traders is try to capture the majority of it and get on the right direction of that move, which is either going to be higher towards all-time highs or lower towards the previous October lows. So that weekly squeeze is important, but the price action is going to tell us the direction that the energy is released, and we don't know until we get more confirmation from the next leg in this market, which is going to require a breakout of this consolidation zone. You can also see we're sitting right on top of a very critical volume shelf right here, which is starting to condense around SPY 438 up to about 440. So this is eventually going to lead to a very powerful supply zone or a very powerful demand zone, and that is going to be a very critical level within the next trend. Whether it's bearish or bullish is to be determined, because we don't have enough confirmation from the price to say which one it's going to be. So then next I want to jump over to the triple Qs, and just like I told you on the triple Qs, a lot of the narrow breadth is in the mega caps, meaning a lot of the buying is only in about 7 to 10 stocks, which are those very popular big tech names like Microsoft, Apple, Google, Amazon, Meta, etc. So in the triple Qs, you can very clearly see this is a very powerful 2-week bounce, but again, we were outside the weekly Bollinger Bands and very oversold, so it's still possible while we are trading down here below the 380s that this could still be a lower high. So if I take off the technical indicators and show you the critical levels, on the weekly chart, to get bullish, we are eventually going to need a higher low, higher high, and that higher high is going to have to break above 383.5. So in the big tech, if we get some kind of pullback to retest this breakout and then break that previous high, that is going to start looking like we are entering into a bull trend yet again. That is likely going to take us all the way up to the previous all-time high above 400. So even in the bullish scenario, I do believe the triple Qs need to cool down and need to pull back and retest this breakout, which could take us all the way back down towards 360 or lower. So we're going to learn a lot about the market during the next pullback, and we're going to see if we can get that higher low and confirm a bull trend, or if all of these bounces are just lower highs within a bear trend. So the critical level in the triple Qs will be the retest breakout between 360 and 370 and the previous weekly high that we'll need to break to confirm a bull trend, which is going to be above 383. So those are your critical resistance and support zones, so pay attention to those levels. And if we put on the technical indicators, you can see the RSI is still above 50, the MACD is still above 0, but it's still currently trying to hinge over and cross back over to favor the bulls, and we still do have that weekly squeeze, which is eventually going to release energy for the next major leg in this market. Jumping over to the Dow Jones weekly chart, you can see we're sitting right on top of the downtrending resistance trend line. So we're going to have very critical resistance right here, right around 343. And again, in order to confirm a bull trend, we will need a higher low, and we could push higher before we get that higher low. So we could push up towards 350. But even if we push towards 350, at some point, we need that higher low confirmation to confirm a bull trend. And that's going to need to hold this support zone right around 336 to 338. If we can't hold a higher low and we start to break down, this was simply just a counter trend rally within a bear trend, and we could be going all the way down into the low 320s to close the daily gap. So critical support in the Dow will be between 336 and 338, and the critical resistance zones will be 343 and 350. On the indicators, the weekly RSI is just now trying to break above 50. We're currently starting to close back above the weekly 20 simple moving average, and the weekly MACD is sitting right at 0, so we're very close to knowing if we're going to cross below 0 and confirm a bear trend, or if we're going to get the crossover at the point of inflection and continue the bull trend. At that point, we're going to eventually release the weekly squeeze energy and get a major leg in this market, and that's why we're so focused on understanding if it's going to be a move higher or a major move lower. And then jumping over to the Russell 2000 weekly chart, I think this is the most important chart because this is where a lot of the weakness in the market has been coming from. And you can clearly see this is an extremely bearish looking chart because we are in a bear trend of lower highs and lower lows. And we did break down below the 2022 lows, which was down there below 162.5. And even though we only spent a day or two below that level, it still counts as a price action breakdown, which could simply mean this was just a counter trend move within a bear market to retest resistance, which clearly got rejected. Price action rejected the resistance trend line and the previous support trend line as resistance. So we have a double resistance there right around 175. And that sharp rejection is very concerning because this was very oversold, and a lot of people think the small caps are very undervalued, which should be attracting buyers. But every time we hit resistance, we just get met by more sellers. So watch the Russell 2000 very closely, and the critical resistance there is 175. And the critical support is down here right around 165. If we cannot hold support at 165 and confirm this is a higher low, we'll likely start flushing down towards 150. Now, if we get a higher low breakout and we break that high at 175, that's a lot more of a bullish breakout look, and that could send us back to the top of the range around 197. So we are stuck in this huge range between 165 and 197, but the current trend on the weekly chart is a bear trend that just confirmed price action rejection from two major resistance levels that happened to coincide at 175. So watch that level very closely, and if you're getting bullish in the small caps, you need to understand this is still a very powerful downtrend until we start closing above 175. Looking at the technical indicators, you can see we were very oversold outside the lower Bollinger Band, so this could just be a dead cat bounce to correct that oversold condition. The weekly RSI is still well below 50, so we still have a lot of bearish momentum. The weekly MACD is still below 0 and trending lower, so that bearish momentum is continuing. And we had the weekly squeeze fired to the downside back in October, and that downtrending momentum is still picking up, which means we could still be going lower towards 150. So if you have any reason to be concerned about the market or any reason to doubt the current bounce in the indices, it will be the small caps, because if the small caps are leading the way lower, it does look like we could be heading back into a bear market. So if we take all of this information and we go back to SPY, you can see that we're very close to some very critical resistance if I put on that resistance zone. So the next week or two, we are going to learn a lot about this market because we're either going to blast through this resistance and eventually get that higher low, higher high to confirm a bull market, or we are going to start seeing some very high volume selling from these resistance zones as we continue to flush for the next lower low within a bear market. So right now, I think the small caps are the ones telling us we could be entering the bear market scenario. So I think you need to be very cautious here if you're bullish, because we are at very critical resistance, which means we're likely going to get sellers and short sellers, which means even if you're bullish, you're going to lock your profits at resistance and then you're going to become a net seller. And if you're bearish, you're going to be taking low risk entry short positions as we approach these critical resistance zones. So I do think the next week or two, we're going to be at elevated risk of selling, and that could send us lower towards that pullback. And then during the pullback, we're going to need to monitor the situation very closely to see if we get the higher low, higher high breakout to confirm the bull scenario, or if we're going to get the lower low breakdown from the lower high rejection and confirm that we're entering into a bear market. So know both scenarios, know all of the critical levels that I talked about, and then write your trade plan right now of how you're going to manage risk at these critical levels and how you're going to trade it accordingly based on what the price action is telling us and based on what the chart is telling us. That's the only way you can become an unbiased and profitable trader that understands how to manage risk. And if you continue to do this over and over, you're going to be a very successful and profitable trader. So don't forget about the Black Friday sale, which you can currently claim massive discounts on TrendSpider. And if you want to learn how to set up your TrendSpider charts to look just like mine, just check out that tutorial video linked below. On top of that, Bank Trade Alerts continues to push towards brand new all-time highs, and we are absolutely crushing this market on Bank Trade Alerts. So if you want to come join us over on Bank, you can find out how to join Bank by clicking on the link below as well. And there's also the Stocks Channel Discord community if you want to come get more access to my technical analysis and want more intraday updates during the market hours. You can find all of those details in the description below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.